some offenses which we don't want us to fall into, and there are penalties associated with those offenses. The extant laws frowns at tax consultants or agents making false returns on behalf of taxpayers. More often than not, the taxpayer will say, I can only afford to pay 100,000. And the consultant too will just panel beat everything and present something that will reflect just 100,000. These are offenses which attracts penalties.
My own question is that, are we going to be so strict with all these tax law that we are talking about, and from that strictness threaten the consultant out of job, and threaten even those who are taxpayers out of job? Even God waives his law sometimes for human beings. Because you know that if not because of God is waiving law, none of us will be alive.
Law. Now, yes, it must guide us now, because what I'm going to use for him must be the same thing I'm going to use for him. It must be equitable. You know, the canon of taxation: equity, fairness. There are certain things that this revenue officer cannot change. There is something they cannot change, like the late return penalty. You know when to file. All this, when she was mentioning offenses and penalties, they are all avoidables. For VAT, they say file it by 21st of the month. If you file by 21st, even if you don't have anything to pay, our form is free. Is that not so? Just fill it normally, nil, file it every month. If you don't file 12 returns in 1 year, how much? No, if you want to do it by, let's say, straight line, 5,000 naira every month. How much is that? 60,000. So you can avoid it. Then if you want to compound it, it's about 360,000, because January you are supposed to file in February. So from February to December, 11 months times what? Times 5,000. That's what? 55,000 for January alone. February 50,000. On and on and on and on and on. By the time you compound it, say, hey, pay 70,000.
Are you wondering what is going on? Those are teasers, appetite whetters if you like, designed to get you into the mood for today's episode of Tax Matters. The setting was the sensation workshop put together by the Micro and Small Tax Office of the Federal Inland Revenue Service in Shagamu, Ogun State, to sensitize professionals in the taxation subsector to their roles and duties in achieving effective tax compliance. And date was Wednesday, the 5th of February 2014. We assure you that there was no quarrel whatsoever. There was no altercation of any kind. Just friendly exchange of words, rubbing of minds. So if we have your attention, let's rock together for the next 25 minutes or so, talking taxation, and taxation only. I am Olumuyiwa Matuluko, and the program is Tax Matters. The sensitization workshop began with a welcome address delivered by the tax controller, Mr. Kehinde Odunsi.
We gather here today to discuss issues that will foster, strengthen our relationship and enhance improvement in voluntary tax compliance vis-a-vis better revenue performance that will help the government to achieve a minimum growth rate of 6.9% GDP in the year 2014. It is our hope that greater tax compliance will be enhanced through this forum, as it has become necessary for us to discuss the role expected of you as professionals in order to ensure effective voluntary tax compliance.
In attendance to give full support was the commander overseeing the Western operations of the Federal Inland Revenue Service, Mr. Moses Opanike.
Why do we always have conflicts when we are supposed to be partners in progress? Let me ask you a question. If the taxpayer is not there paying the tax, you as the revenue officers, do you have any business being in this place? Will you be here? Yeah, if you are not here and the revenue officers collecting revenue for government, if you are not there, you tax consultants, you auditors and the bankers, will you have business to do? No. We are supposed to work in harmony. However, today, everybody is going to learn one or two things about your own roles and my own roles, so that that conflict that used to be there will be removed. That gaps will be removed, and everybody will know what is supposed to do, so that we can work in an harmonious relationship. Taxation that we are practicing is a profession. Am I right? That if it's a profession, it stands on three things. Taxation is purely based on three things. What are they? The tax policy, the tax law, and the what? Tax administration. And each of them, they are not compartmentalized. They are not in a watertight compartment. Tax policy is the baby of Federal Ministry of Finance. Federal Ministry of Finance is the body to adequately take care of tax policy for the whole country. You know the type of country the type of constitution we operate is a federal constitution. Is that not so? Where we have the federal government there, the state government, and the local government. Number two is the tax law. And everything you do as tax administrator is based on the law. Then the third aspect is tax administration, of which you, as a staff of federal revenue or staff of state internal revenue or the local government revenue authority, you must keen in. You are to administer what? The tax law that have been enacted by the government. So you now see that you, as a taxman, you don't have anything to do outside the tax law. And our tax auditors, consultants, and the bankers, they must know how they key into that. So we must have this at the back of our mind.
Immediately following that cerebral presentation by Mr. Okpanike was the presentation of the sole paper for the day, delivered by the head of the tax audit unit of the Shagamu Micro and Small Tax Office, Mrs. Olajumoke Adelegon.
It is my pleasure to present this paper early in the year, so that we all will know where we are, we know how far we have gone, and where we are going. The roles of professionals in this context is restricted to auditors, tax consultants, and bankers in achieving effective voluntary tax compliance. My regional coordinator has told us some of our roles, and I know that we know some of the roles. We all know what tax is. We know that tax is a compulsory levy imposed by the government against the income, the wealth, the profits, and resources of individuals, organizations, with the intention of generating revenue to provide infrastructural facilities required for economic growth and development. In collecting this revenue or generating this revenue, what are our roles as professionals? It's not just the government alone that we collect this tax and it ends there. We as professionals are expected to perform some duties, which we assist the government in effectively collecting these taxes and using it for the purpose for which it is meant. The duty of assessing, collecting, and accounting for tax lies with tax authorities in collaboration with other stakeholders such as taxpayers, auditors, tax consultants, bankers. We professionals, we also double as taxpayers, because apart from acting on behalf of your clients, you are also expected to pay tax. Our roles are time bound. We are not just expected to do things at our convenience. The tax law specifies specific times that we are expected to do some things, and if we don't do it as at when due, there are some penalties attached to such offences. We as professionals should be able to identify our roles in achieving effective tax compliance. We should be able to identify some of the tax offences and penalties under the Nigeria tax system and how to avoid them. Some of these tax offences, we know them, but we may not know them. We may know them on the periphery. We may say, after all, I'm not a lawyer, I don't need to know them in details. There are some that we know, but we don't just take them serious. But during the course of this paper, we'll take us through some of these offences and the penalties that are attached to them. Now, as professionals, what are our roles? We start with the external auditors. We all know that the external auditors are employed by the company to audit the financial statements of the company and to form opinion on them. Whenever we look through the financial statements of the company, what we like checking in the first instance is the audit opinion. We want to know whether the opinion was qualified or not. If we see any company whose financial statement is qualified, we say this company is not a good company, or there are some issues in that company. So basically, one of the duties of the auditors is to audit the financial statements of the company and form an opinion thereof. Secondly, the auditors are expected to make reports to the shareholders of the company. Apart from auditing the financial statement, the auditors are also expected to make reports. And that's when we come to the issue of management reports. There are some instances when we ask questions from the auditors, and they'll tell us, oh, we had issues. We told the company, we asked them, okay, your reports, were they documented? It's one thing to discover that there are issues in a company. It's another thing for you to document those issues, report them, and put your recommendation there, what you expect the company to do to improve on their internal control. Then thirdly, the auditors are expected to retain current audit working papers for at least 6 years. It is the duty of the auditor to retain, because those working papers that you use in preparing your financials, in preparing the audited financial statements, are yours. They are your property. You are expected to maintain them for 6 years. So we are hearing this now. We don't want a situation whereby we'll come for audit and we ask the auditors, okay, where are your working papers? And you tell us you don't have any. You should please maintain your working papers. It is your responsibility to do this for 6 years. Then to exercise all due diligence and skills in the performance of his statutory duties. Some of the clients you are auditing, they are not professionals in this field. They may not even know anything about bookkeeping or know all this record keeping. You are, as professionals, are expected to advise them. And you are also expected to use your skills to see what they can do to ensure that they perform their role in line with the statutory requirements. Once an auditor is appointed by a taxpayer or by a company, the onus lies on the auditor to inform us that the audit firm has been appointed as the auditor of this company. And when the auditor also stops auditing the company, the onus also lies on the auditor to also inform us that my appointment has been terminated. This will assist us when we go out for tax audits. There has been instances whereby when we are auditing a company, the current auditor will tell us, oh, I am the new auditor. I was not the one that audited those previous years. Meanwhile, we don't have that information in our files at the tax offices. Finally, the auditor is expected to ensure that they are registered for tax and are also tax compliant. Now, in order to carry out these duties, the auditor must possess some things. The auditor must possess professional qualification, practicing license from ICANN or ANAN with seal and stamp. There have been some cases where some returns are filed to us without seal or stamp. Such returns were returned back. The expectation of the revenue authorities is that when you are filing your returns with the audited financial statement, the audited financial statement must be signed by the auditors and the representatives of the company, and it must also carry the stamp and seal of either ICANN or HANAN. Then the auditor must be independent. That means the auditor must not be a staff or a director in the company being audited. The auditor must be honest, bold, knowledgeable in accounting, taxation, business, computer, and so on.
Mrs. Adelogun's paper was the toast of everyone at the event, and we are sure you are enjoying it. She clinically treated the roles of the three professional groups one after the other. On this episode, we have been able to bring you what she had to say on the roles of external auditors in achieving effective tax compliance. The roles of tax consultants and the banks will come to you on the next episode, along with offenses and penalties. In the remaining time available to us on this episode, let's bring you some of the observations from the floor, from the participants, and the reactions, the responses from revenue side.
I thank the organizers of this forum for their foresight, but I will also like to say that the presentation has fallen short of my expectation, in the sense that there is a prevailing problem now on this Financial Reporting Council's requirement that we should register and get numbers before we can even sign accounts. So many of us have not even been able to sign the accounts, partly because of that and because of the IRS requirements. So these are problems, additional problems, apart from the one given to us here. But as to the issue of penalties, which you seem to be determined to enforce, I can say very clearly that it will, in the long run, not be in the interest of inland revenue. Currently, it is not in the interest of we accountants, which you claim to be protecting, because many of those that have come to us about what is their expected payment for this year, and we state out all those rates, telling them that the inland revenue is not prepared to negotiate, and that we too are not even prepared to cut corners because we don't want to go to jail. Many of them have not been forthcoming, and I don't really know how that could be in the interest of inland revenue in a situation where, coupled with those ones have been enumerated, and the declining economic climate, which is so apparent and killing many of them. So I really implore the Inland Revenue Service to go back to the drawing board, because if we try to be as legalistic as we have, you are trying to say, many of them will not be able to pay the so-called penalties, not to talk of even the tax that will come out after we have, if they make any profit at all. And by your own training, you've told us that even if a company doesn't make any profit, there's still a minimum tax they have to pay, which many of them cannot afford.
We have been talking about law, and we are so much of law in Nigeria, and we use law to destabilize many things. First of all, man was created before law, and law were made for men to comply with. If that is the case, I know the laws are written in the book of law. All right. So my own question is that, are we going to be so strict with all these tax law that we are talking about, and from that strictness threaten the consultant out of job, and threaten even those who are taxpayers out of job? Because what I think, even God waives his law sometimes for human beings. Because you know now, if not because of God is waiving law, none of us will be alive. So all this law that we are talking, we continue to talk, and we want to threaten people out of their living. And we all know the situation of Nigeria.
What I want to raise here is just a scenario which I feel that maybe the chairman there can also render an assistance. It's not something that I experienced there. I experienced this in Lagos. So the scenario is this: is between a holding company and a subsidiary. A holding company that is into fishery, which is commercial fishery, agriculture, and we all know that the activity there is not vertical, but we do render nil return. And then the subsidiary was created solely to produce ice block, and I know that ice block is produced from water. And that subsidiary too is into agriculture. That is, solely what subsidiary does is to give this ice block to the holding company, which holding company was buying from outside before. We've been filing returns for this subsidiary. All the activities, intercompany activities, not doing it to outsider. So we've also been filing appropriately for the holding company. But at a point, at one ITO, there was a loggerhead as regards this, that invoice should be raised and then VAT should be paid on this ice block of 18 for like up to 5 years. And the owner of the company got annoyed that the thing should be stuck there, that it doesn't mind to even close that one. So of what benefit will this do to the federal government, FRS, and we consultants? And we are losing jobs based on all this just classification, administration, and all that.
Don't you get carried away just yet. There are two sides to every coin. And so Mr. Okpanike rose to the occasion, stating very clearly the side of revenue on all those matters raised. On the International Financial Reporting Standards, IFRS.
We are dealing with small taxpayer, micro, and small that have not even started filing based on IFRS, and ICANN, CITN, and a number of these consultants, they have been organizing lecture on IF. We cannot be talking of that one at this level because everybody will be bored.
Regarding trading between connected parties,
everybody knows that agree is what? Non-vertible. But he has a subsidiary that is doing what? Ice block. This ice block is already processed. Is that also? And the two of them are what? They are all the same company. Now, FRS is saying that Federal Revenue said that the subsidiary should VAT them, should invoice them. Okay? Yes, this is my product. This is my own final output. Is that also ice block? Because I'm selling, I am not excluded from VAT. Is that also? I now invoice them, and I say, okay, you are selling 1 million and put VAT there, 50,000 or whatever. And then the holding company will do what? The holding company is going to pay. Is that not so? And he's using it as part of his what? Input. Okay? As part of production. Now, and this one, I will ask you a question. Under VAT exempt and zero rated, who is allowed to claim input VAT? If subsidiary has invoiced me, okay, with VAT, fine, I will pay. Then, because I'm exempted, I think it's exempted, I will just go to Inland Revenue, give me my money. It will nil off, because the VAT that this man is paying, he has already he has already invoiced holding company. Is that not so? And he has collected VAT, which he has already paid to FRS. Is that not so? Now, the holding company that is exempt and is already incurred input VAT, which he has nothing to net it off. He will go to FRS, collect the money back.
As we said earlier, time constraints have forced us to break this story from Shagamu into two parts. Next episode will allow Mrs. Adelegon to remind us of the roles of tax consultants and banks in achieving voluntary and effective tax compliance. She will also remind us of offences and penalties for infractions. Of course, there will be time for more observations from the floor and more responses from revenue side. We thank you most sincerely for spending time today with us on Tax Matters, and we do hope that you'll be here next week, same station, same day of the week, same time of the day. Have a blessed week ahead.